All right. Hey, everyone. Mark here, Mark Pre-Markets. Hey, thanks for joining me for another Greenbridge Investing market analysis. I see some funny questions here to start the day off. Hello, Elizabeth. Why do you want to hear more Seinfeld impressions? Remember that we had that guy the other day that called me immature and the bad impressions. That may have been Jerry. Anyway, all right. So in this session, we're going to talk about the risk on Bitcoin. I keep getting questions, and it's understandable. You know, is Bitcoin along yet? This and that. I want to talk about that. That's an important thing. Also, I want to address something about volume. Just some things to keep in mind when you're trying to use volume to help you make a better decision. Plus, we're going to take a quick look at the stock market as usual, gold and the dollar and those things, and then I will get to your questions. So just please share your question in the chat now while I'm going through my portion of the analysis, so that I can, once I complete my portion, I can spend time on your questions. Also, one symbol per person, please. If you have a altcoin, please put USD or USDT after the altcoin so I make sure I get the correct symbol. All right, so with that said, let's get started. This is for educational purposes. Oh, hold on, I put the wrong slide. Wait, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so we're gonna start off with Bitcoin, and then we'll go on to the other markets. Now, first things first. So Bitcoin has been very tough in, I'd say, the recent few days because it's hesitant, right? Let's just take a look at this price action real quick. What's going on here? So the other day when I was doing my other stream, when I was simulcasting onto TradingView there. Oh, and by the way, speaking of that, if I see people are sharing it in the chat here. If you want to share your city or what country that you're located in, it's always a fun fact. I always enjoy seeing that. I'm broadcasting from the greater New York City area, also known as Northern New Jersey, okay, in case you're not sure of where my accent is from. Anyway, so we were talking about Bitcoin over here, right, with that solid green candle. Looked like it was going to go straight to 60K from there, right? And if you watched some YouTube videos, they would also lead you to believe something like that. And what was I saying? Well, you can't see what's over here, okay? You can't see what's there, and there could be a large sell order sitting up there, broken up into smaller orders. There's no way to know, and we get the red candle, right? Okay, now, the red candle also doesn't really mean we're going to sell off. It just means that this is an area that's attractive to selling activity. I don't want to go long here, okay, because chances of faking out are high, all right, and there's all kinds of other problems. Not only that, but the 60K area, if we just zoom out a bit, the 60K area, right, this whole area back here is just one big resistance area. So you better believe there's going to be selling activity there. There's probably limit orders all over the place, and that is not favorable, right? This makes the location, the risk of the location, very high for swing trade longs. So keep in mind, I'm talking about swing trades, and I'm not going to short it, so I'm only interested in longs. So I want a location that offers a good probability, and I want a reward risk that makes sense. That's not here. So people are only focused in on what they can see right now in front of them, right? So they, oh, look, breaking out, going higher. I'm going to watch my favorite fake guru, and he said it's going to 100K by next week, so I don't want to miss out, right? That's the feeling that may go on inside of your mind, but it's ineffective. Again, what you cannot see here is the probability. And there's no way, I can't sit here and say, well, there's an 85% chance of reversal here. Like, there's no way to put a number on it, okay? So I can only go by the general probability in the area. Basically, there's probably a greater than 51% chance or greater than 50% chance that price will pull back from here. I mean, that's the best I can do, right? So with that, just with that alone, that means no longs. I don't care what it looks like. I don't care if we get another vertical candle. I don't care what goes on here. I'm not interested. All right. On top of that, price is trying. You could see it's trying to break out, and it's hesitating. Right. So that's usually like the first sign. So what I want to see for a long, and it hasn't changed. What I want to see for a long, and I was saying the same thing on Monday. I want to see it pull back to that 50K area. Why 50K? Because that's the support that's in play. That's it. And as you can see with this pin bar on the Bitstamp chart, which people were pointing out on my previous stream, which I thought was very interesting because that pin bar is not on other charts like Coinbase. But anyway, that's the location where obviously buying is more likely to appear, and there's reasons for that, okay? There's historical chart reasons for that. We have an old resistance there. Old resistances have a tendency to act as a new support, and there's an order flow reason for that, okay? So that makes sense. So I want to see price touch that area, and then I want to see some sort of confirmation so that I could measure risk. At that time is when I could measure the risk, and I can determine if that risk is appropriate or not. In recent price action, for about 4,000 points on the swing trade time frame has been the average risk. So if I see a risk greater than that, then I hesitate because I'm not really interested in something that greater than average risk. Right now, if we look at the risk right now and we use 50K as our point of reference, we're looking at about 7,000 points of risk, way too high. If I don't want to use 50K as my point of reference and I want to use the previous candle low, which you can do at 54, basically 54,000, then you're looking at, what, 3,000 points of risk. And you know, that's much better. Okay, yeah, that's within range. But the problem is your chances of getting stopped out are very high because of the probability of the location. You have to be able to see all those things. What I'm describing here is called context. You're not going to get context from an oscillator. You're not going to get context from volume histogram. You're not going to get context from any magical tool. It comes from comparing historical price action to the price action now in relative to the location, okay, and what that means around the location. So that's that, right? The only way you learn context is either through experience, by being in this game a really long time, or someone teaching you, right? Your typical fake guru or your typical guru, they have no sense of context. They're following exact things on your chart, and that is only effective if you have a context to put it within. Otherwise, the outcome is random, right? And I say this now because I see so many people on YouTube sharing their magical strategy. My magical 80% win rate strategy, and I have an oscillator and I have this moving average and blah, blah, blah. And they're saying it's 80% win rate, but it's actually not. It's random, okay? And they're either they don't know that, or they're just lying to their listeners in hopes that, you know, the listener clicks on an affiliate link or something. Anyway, all right, so that's Bitcoin. And this is going to apply to many altcoins that are in a similar situation, and I'm sure when I see the questions here, we're going to see similarities. All right, so that's the Bitcoin situation. Let me know if you have any questions about it. Let's jump over to the stock market real quick. All right, NSX USD. So this is interesting, right? Now, remember on Monday, I talked about this. In fact, I talked about this the week before as well. I said I wanted to see either a higher low or double bottom in the stock market. Well, we got the higher low, and we got it yesterday. It was established. This, I don't follow news at all, but when we went over the economic calendar on Monday, there was a CPI report, and I suspect this has to do with the CPI report, which is an inflationary report, okay? Now, upon that report, I'm guessing it's the report. It really doesn't matter if it was the report or if it was something else, but the dollar pulled back, major pullback on the dollar. Gold and everything else rallied, which again, that's the inflationary scenario, and that's the lower interest rate scenario. Well, the stock market loves something like that, right? So we got the higher low, and we got follow through today. Now this candle was overnight was pushed. It wasn't like you had all day to get into something like this, right? This was like an overnight move, and now it's just sitting on its highs, higher low, higher high. Structure has changed. So what does this mean now? Do you buy the NASDAQ now? This was very quick, okay? And this also aligns with the holiday rally that I've been talking about. Because I said around this time, if you go back to my streams, listen to my streams. If you go back, I talked about this typical time is usually when the holiday rally finds a bottom, okay? By the time it's December and it's pushing highs, you'd be like, why didn't I see that coming? Well, this is it. Okay, this is the confirmation. So What do you do now? And by the way, the market was never really bearish. I mean, we talked about the bearish structure, the corrective structure, but I've pointed out many times, there's really nothing bearish about this chart. Okay, nothing. It's just higher lows and higher highs. And we had just a minor, this is a minor pullback. We didn't even touch 14,000 on the NASDAQ. So again, what do you do here? Well, hopefully you're not short anything. But because if you are, you definitely don't want to see this. This is not what you should see. The lower high should have led to a lower low. Okay, so reversal is now confirmed. So this means this is a good time now to start considering swing trades for stocks, right? What stocks? Well, let's take a look at AMD. Well, AMD is on its way, right? You missed that, but it had the consolidation breakout. I talked about this. Other stocks, Apple, AAPL. Look at this. Looks just like the NASDAQ. Higher low, pin bar yesterday. Look at this, gapped a little bit today, right? And it's going for the breakout. Now, this type of breakout on something like Apple makes sense because you have the NASDAQ behind it. But again, of course, Apple is the NASDAQ, or the NASDAQ is Apple. Your risk would be defined by 139.20, basically 139 even. This thing's at 143 right now. You're looking at about $5. But the potential is decent if this thing works its way back to the highs over the next month or two, right? That's how you put a swing trade together. Something like that. You have the structure is now changing, right? The corrective structure is basically no longer in play once this higher high is made. Okay, so that would be a nice example. So if you find charts that look like this, and you have the NASDAQ and S&P behind you, I mean, look at the S&P. Look at this, right? That's a pretty sharp candle. Keep in mind, over the next few weeks, we have company reports coming out. We also have there's going to be another FOMC meeting next month, I believe, a very important one, where they're going to be more clear on their interest rate plans or whatever. Transitory interest, no, transitory inflation, they like to say. So those can act as catalysts that will either set the tone and keep this new structure going or change it, right? So there's no way to know. A chart's not going to tell you. So the point is this: the structure's changed. The stock market now favors longs on the bigger picture. So highly correlated stocks. I had a question about GME from two people. All right, now GME, as we know, GameStop, it's a stock. It's a it's an NYSE stock, and it's not a highly correlated market stock, meaning this thing doesn't follow the S&P. As you can see today, it's red, right, by 77 cents, which is nothing. But the S&P is up 70 points. Shouldn't this thing be doing better? It's not, because it's not a highly correlated stock. This is a hype stock. This is a stock that gets going because some morons in some chat rooms somewhere start hyping it, and that's what gets this thing going. So you have to play more of the candlestick patterns. You can't use that relative strength or relative weakness concept with something like this. You need to find correlated stocks like Apple, okay, like Facebook. Look at Facebook, right? Facebook's interesting. Pin bar to go along with the other day. Now, Facebook's not doing that great today, but this is a failed low, is what that is. If the market continues to rally, most likely Facebook will change its structure, especially if it takes out this high over here at 338. So that's what you have to watch for. The general trend on Facebook is not bearish. That's not bearish. So this corrective move, once that gets negated, that thing will be on its way higher, okay? Something like Amazon, higher low on Amazon. Again, another big NASDAQ heavyweight, okay? So just to point out a few things. Also, Amazon's near that range low. Not a bad area, but your risk will be defined by the range low, right? 3204. So I just wanted to throw a couple of those in there just to give you some perspective. Now, let's take a look at gold. And again, thank you all for your questions. I'm going to get to them momentarily. So gold is out of control. Look at this. So gold is up, what is that? Today, it's up 5 points. Okay, but yesterday, it was up like 30-something points, right? Look at the nice structure on gold. High or low on gold. This was very tricky, by the way, okay? Because we had the bearish pin bar. This was bullish the other day. Then it turned around, gave a sell signal, actually, and then turned around again. We don't like to short gold anyway, right? But the point is, now, do you buy gold here? you're back at the range high, right? Or you're around this consolidation high. This is a tough spot. So what do? You wait for a continuation pattern on gold. Will gold pull back? It might. Gold is all over the place, okay? If gold can pull back to something like 1770, because this thing's what we're at, basically 18 right now. If this thing can pull back to that 1770 area, you may have an opportunity, right? That's that old little minor resistance back there, and that could be a nice continuation support, meaning you get the higher low, and then it should go for the higher high. If this thing's going to be in a trend, keep in mind, the short-term price action on gold is range-bound. That's not a trend. On your smaller time frame, it might be, but your smaller time frame means nothing to the bigger picture. So the huge picture on gold, when we really zoom out, clearly it's a consolidation, right? You see this huge consolidation dating back over a year, and it's a higher low off that 1650 area. Okay, you can see that on the chart, and it's where eventually this thing should break out. I mean, theoretically, based on this formation. So, you know, good for long-term holders. If you want to get exposure to gold without having to buy the CFD, you go for gold mining stocks. Now, if someone was asking about like wheat and precious metals the other day, and I was like saying, hold off on this thing, because if gold gets hammered, all right, and we were looking at the stronger dollar and this and that, these things are going to suffer. Now, look at this. What a move, right? This thing is up a few dollars in just a few days, which is a big move for this thing. So what do? Do you buy it now? No. Look, you're back at this resistance. Why would you buy it there? Why would you buy it there? So you wait for a pullback, okay? But the structure's improving. That's what's important. The structure's improving, because now if you get involved in it, it's more likely to work with you, not against you, all right? So the only advantage we have in this game, by the way, as a retail trader, is trend. That's all we have. We don't have anything else. So any little gimmick that someone throws at you, it's pretty much useless. All right, let's take a look now at the dollar real quick, right? DXY, because this is, look what's going on. This is an important gauge that a lot of people don't bother looking at because like, oh, who cares? It's the dollar, right? Well, the dollar is basically a reflection of interest rates. And look what we have here on the dollar. That's a failed high because it tried to break out, it made a slight higher high, and failed right away. That was on that CPI news or whatever the event that caused that. To move the dollar in a big way like that requires a significant catalyst. Now, is this a trend reversal on the dollar? Because the dollar, this movement on the dollar is not bearish, okay? This is not bearish. And today we're getting a bullish pin bar. No supports on the dollar have been broken yet. So I'm not convinced that the dollar is turning bearish, which means it's not a good idea to chase things like gold or anything that trades against the dollar if this dollar looks like this. The dollar needs to prove that this bullish structure is changing, and it hasn't proven it yet. So you have to keep that in mind. Now, the other day in my stream, someone had asked me about the pound, okay, and asked me, what do I think of the pound? And I said in the stream, if you go back, I said, it looks like a short. And I want to point that out because this is why it's so important to be able to adjust. Look at this. This was over here on this bearish pin bar. And I said, looks like a short. And it took out the low of the pin bar and actually generated a sell signal. Okay, I didn't send that out, but that was a sell signal. And then we had that event, whatever that was that came out, and look at that, right? That's not what should have happened after taking a short off of a lower high. That's why it's so important to use a stop and to be prepared for stuff like this, because the chart there was no warning on the chart that you were going to get a candle like this. This was a catalyst driven by a specific piece of news or whatever, right? The dollar pulled back and this thing squeezed out all those shorts. So the only way to protect yourself against something like that, again, is a stop loss order. There's no other way to do it. So, you know, you don't want to get caught in something like this with an opinion and say, oh, the pound will pull back. It'll pull back. I mean, yeah, there's another resistance here, but you now have a higher low in the pound. So that's going to be tough to short. I would not really be looking for shorts now, not with this new structure in place, unless, you know, the dollar can prove otherwise, because it's against the dollar. Anyway, just wanted to point a few of those things out. Also, real quick, bond market. you shouldn't lose sight of the bond market, because this can also give some insight when it comes to bigger picture stuff. Now, someone had recently asked me too about shorting the bond market at the low. I said, no, here you go, here's why. Now you should be open to looking for it, but there's no reason to short this thing right now. There's no sell signal, but you do have a series of lower highs. So if the bonds turn around over the next week or so and start taking out the lows, then we should see dollar going higher, because it implies higher interest rates. So with the bonds in this trend, let's take a look at the 1 week real quick. What's going on in the bigger picture, right? Because this really is what matters in the bond market. I mean, there's a lower high established, and it hasn't made the lower low yet. Looks like it found some support at that low. But with this type of structure, I'd be anticipating the lower low over the next maybe month, because these things take a while. Bonds take a while to make any significant movement. So, and that may align with the next FOMC meeting, right? Maybe the smart money knows something. So just have to keep an eye on that. You can't trade on those type of opinions, because again, there's a lot of things that, can come out, whether it's politically or, company reports or whatever, that can really keep the stock market going no matter what the bonds do, right? And it's especially important, going into the holidays, because of all the optimism and all the other nonsense, right? Markets are irrational. They're not logical, and people think, oh, I can't go much higher, and all this, unemployment and this and that, and people don't have jobs, and right, that's all logic, and the market doesn't care about your logic. So you have to go with the perception of the future, and that's what price is. That's what determines price. The irrational forces of greed and fear, or perceptions of the future, and those perceptions are always changing. That's why price action offers much more value than anything else, because it's telling you what price is doing now, and you can compare that to what it was doing previously, and you can get some insight from that. Okay, let me jump over to your questions. I'm moving quickly today, and again, thank you all for your questions. Hey, Avi from Israel, update on SHIB. Let's take a look at SHIB. All right, so SHIB. What's going on here? So I know this one was a big hype one the other day. I know that Elon Musk said something about this or some kind of nonsense. Again, look what's going on here. And this is why I don't like these coins, especially if you see them after the fact. So what is going on with SHIB? Well, I see a lower high, okay, after a pretty steep pin bar, okay, which means it failed to make the new high. The party may be over. You have this current red candle. Now, it hasn't taken out any supports yet. Now, with the lower high, I would suspect that this thing is going to consolidate somewhat. So here's what you want to do with something like this. If you're not long yet and you're looking for longs, you want to look for your support levels. If you're long, hopefully if you're in from a good price, I hope you took something off the table. Okay, because if you don't, because you think that this thing's going to go to $100 because some moron on YouTube is saying it's going to go there, well, I'm sorry to ruin your hope. But here's the thing: you want to find these support levels. That's what these are. That's what I'm putting over here. These are support levels. Those are areas where this thing is likely to find buying activity. Okay, so if you're not long and you're looking for a long, these would be more sensible places. Even in the midpoint over here too isn't bad. That's a bunch of zeros and like 1552. I can't even read the number. Something like that. That's the areas you're looking for, and you're looking for some sort of buying price action. When it comes to these charts, they're like worse than penny stocks, right? So it's very hard to take swing trades on something like these. Thing is, if this thing pulls back significantly and you want to throw $100 at something like this, okay. Because if it goes to zero, you can afford to lose $100, no big deal. But certainly don't want to be throwing around $10,000, $50,000, $100,000 into something like this, unless of course you have $1 million account and it's only a small percentage of your $1 million account. But this is basically a hype penny stock. That's how I view this thing. All right, so look for your supports. Otherwise, if you get another steep green candle here and it's going to go for another high, then you're going to have to play the breakout game. And the thing with that is you need to be very nimble. If you get a big green candle and you buy the breakout of the high and it turns into a red candle again, you have to make adjustments. All right. If you're playing with small money, again, you don't have to be so on top of it. But That's how I would treat something like that. Okay. Anyway, thanks for asking. Hey, Catch. Hey, David from. Oh, is it David from Spain? Hey, thanks for stopping by. Could you please check ETH-BTC? Okay. ETH-BTC. So Ethereum against Bitcoin. So these are, these cross pairs, and I've said this many times. I'm not a big fan of these cross pairs because it's two unstable currencies, on top of each other. It's better to work with, one against the dollar or USDT or whatever, something like that, because you need a stable coin on the other side. It makes these charts very erratic when you have two unstable coins. But if you want to look at levels, there are some levels here. So what are we looking at? You have this support in the area right here, okay? And you have like this resistance area up in here. You have that. Those are your levels on this cross pair. What do you do with this right now? Well, you're sort of going back toward the middle of this range. You have congestion right in here, right in this area. So I wouldn't buy this, okay? If you're looking to buy Ethereum against Bitcoin, you're probably better off waiting until it gets nearer a range low. And what needs to take place for something like that to happen? Well, Bitcoin will have to appreciate much faster than Ethereum, and this pair will go lower, right? And then you should get some red candles, and maybe that will give you the opportunity. Otherwise, that's it. Otherwise, you're buying in the middle of the range, and it's highly random there. Again, I don't like these cross pairs, because again, you're dealing with two unstable currencies. If you make it to if you're in some of that and you make it to the high of the range, good place to distribute risk and get out of some of it. So thanks for asking. Hey, Olga, can you look at DOT? Okay, so let's take a look at DOT. And now DOT obviously has been outperforming here a bit, right? Let's look at some levels. So this is a level. That's an important level on DOT. It's an old support, right? Became a resistance and now is likely to become a support again. That's one level. The other level on something like DOT is over here. I know we've talked about this before because people ask about DOT. Maybe it was you. But here's the thing. Right now, if you bought this breakout, what you need this candle to do, for one, is this is not exactly the best sign. You don't want to see this thing turn red. Now, it's not a pin bar, but what you want to see from this is the next candle needs to open, turn green, and break out higher. If the next candle opens and takes out the low of this candle, you have a sell signal. And in this location, right, this area, that sell signal is basically equivalent to a failed high if it completely sells off from here. Now, what makes that more interesting is look where you are. This is an old resistance area dating back a few months, and it's attracting selling activity. What a surprise. So that's why not a good place to be long, and not a good place for new longs. It's a good place to distribute risk, meaning you're locking in profits because you got it from lower price. Okay. Also, a lot of this is going to depend on the outlook of your strategy. Is it a swing trade or is it an investment? Right? If it's an investment, it's never a bad idea to take something off the table, or, when something's on its high, even if it's a small percentage, maybe 10% or 20%, something like that, just to capitalize on the buying activity that's there at the moment, because you can always buy it back, when it goes lower. And when it comes to inventory, even if it doesn't go lower, it doesn't matter, because you're playing a long-term game. I don't like these, when it comes to long-term, I don't like these coins at all. These are better, I think, more for short-term speculation. Now, other than that, if you're interested in buying DOT, you're better off waiting for a pullback. And that pullback should coincide with something like on Bitcoin, okay? Now, again, sometimes these altcoins, they break out and they do their own thing because someone's hyping them. Maybe the developers came out with some kind of event. They're doing something, whatever, and it gets everyone excited. Don't get sucked into those, okay? Always check those levels. I wouldn't buy this here. No way. So, at least wait for better levels and see how this thing unfolds. That's the best thing I could say about that. Thanks for asking. So Ethereum, here, I got Elizabeth asking about Ethereum here, so we'll cover that both here in one chart. So reasonable to see Ethereum hit 4K in the next week or so, okay? Let's take a look. Ethereum, All right, so is this the right chart? Let me see. Hold on. I have a couple of charts. Hold on a second. I have a chart with like some lines on it. Let me just pull that chart up. Is this it over here? Hold on a second. That's Ethereum, or is it this one? Oh, it's this one. Okay. So, will Ethereum go to 4,000 over the next few days? Is that within reason? Well, you have the structure, right? You have the higher low. It's going for the higher high. Where is 4,000? Let's put that line on the chart. Is this 4,000 up in here? This is 4,000 is right about there. Okay. So yeah, it's certainly within reason over the next few days if this thing can maintain this momentum. So what you need is this candle to close like the way it looks right now. Next candle needs to take out that high and you can get into that area. Now that is a significant resistance. As you can see looking back here, price has reacted in a bearish way a couple of times, right? So definitely a good place to be taking money off the table. Now that doesn't mean it will fail again. I certainly wouldn't short it there, especially with this bullish structure right behind you here. It may break out. It's possible. And you know how excited people get with Ethereum. I mean, you'll get 100 YouTube videos talking about how Ethereum is going to be at 20,000 tomorrow. You better believe that attracts more people buying because people have no idea what they're doing. They believe the video and they think, oh, let me get in while Ethereum is still cheap. Meanwhile, they're buying right into the resistance, right? So keep that in mind. It may break out, but again, if Bitcoin fails, Bitcoin is still the leader. So even if this breaks out by a little bit, maybe it goes to like 4,200 or something, gets everyone really excited, and then Bitcoin fails, right? For whatever reason, pulls back to 50K. This thing will pull back too. So the point is, it's about the location, the probability of the location like I was talking about before. And this is not a good location for new longs. So if you're not long Ethereum and you want to get long Ethereum, you need a pullback. And that would be a better probability. And that pullback right now is about there. You may argue and say, well, what about over here? Well, that would be also an interesting area, but I think it's too close. Okay, it's possible, but Bitcoin is going to have to give you the confirmation in such an area, and you may get like that double bottom or a little mini failed low. That could give an opportunity, but the lower one, which is what is this price here? 31. Those low 30s, the low 3,000 area. That's probably a much more attractive area if Ethereum can provide such an opportunity. Keep something in mind. When Ethereum pulls back to one of those supports, and same with Bitcoin too, when it gets to the level, the first question I get is, should I buy it? Should I buy it? Well, no, not if there's no confirmation, because it can push right through the level, like the level's not even there. So what you want to see when it gets to the level is some sort of reversal, some sort of confirmation. And also it depends on how steep the momentum is, right? Back here, when we had this sell-off over here, that's where we got the question, not interested in buying. That's very steep. You don't want to buy into something like that. All right, now you could say, oh, but it would be green now. Yeah, but you have to sit through a lot of garbage and a lot of bearish blah, blah, blah. And I can only imagine what all the fake gurus were saying during that time. When you don't have a lot of experience, you will get affected by all that negative sentiment. Even if you say, oh no, I know it's nonsense, but it will still be in the back of your mind, and it can cause you to make decisions that otherwise you may not have made because they're putting these irrelevant ideas, seeds in your mind. All right, anyway. So that's Ethereum. Thanks for asking. So real quick, and I want to mention this now. So I've been sprinkling many Seinfeld impressions here for you. I want to say something about volume, okay? Because I had a question about volume I thought was interesting, and we can use Ethereum as an example. You notice I don't have a volume histogram on this chart. I don't look at volume. Now, I want to say something about the volume histogram because a lot of people talk about it and they say, well, if price is making a higher high on increasing volume, that's good. That's strength, right? And that's common sense, sure. But we're playing a game where common sense doesn't help you. We're playing a game where conventional wisdom, intuitiveness, all that stuff that comes naturally to us does not work in a random environment. We are in a random environment. So things that visually look like they make sense are not to be trusted. So one thing, like an example, volume histogram, and I'm going to explain why here. So let me just draw a little, I'm not going to put the real histogram there. I'm just going to draw a little example. Right, so let's say your volume histogram, you have like a nice, rising volume bar, and this thing is rising, and you say, it's strong. Well, here's the problem with that. Volume histograms, or any other type of volume information that you get in this space, whether it's Ethereum, whether it's a stock, Forex is a joke, don't even think about Forex. But whatever volume information you get, that's transacted volume. That's volume that took place previously, right? 2 orders were matched. It now goes into the column. This 100,000 shares went off at this price. And you think, oh yeah, wow, that's a lot of shares. And price closed stronger. It must be bullish. But what you cannot see, what the volume histogram does not show you, is what is ahead of you. Is there another million shares, or 2 million or 3 million shares to sell? The volume histogram is not going to show that. Okay, it's not going to account for that. So you're sitting there thinking, it's strong. And you're buying into that huge sell order. And then, and meanwhile, the volume bars, everything is green, but someone is selling a ton up in that area. And that's something you cannot see. What would be helpful information would be if you can see the limit orders and who they belong to. You know who will show you that? No one, because that's private information. If there's a large player, like a whale, or maybe there's a number of players or whatever, just a larger part of the population, and they all have sell orders up there, and they're large sell orders, it'd be helpful to see the account so that you could see if it's the same person selling. Right? Account number, 0015, blah, blah, blah. Oh, look, he's got 20 orders for 100,000 shares spread out at all these prices. He's probably a fund manager or something, and he's getting out. So why would I want to buy it from him? Okay, because they have better information than we do normally, right? So anyway, that's the thing. That's the limitation. Like I said before, any tool that they put in front of you, right? All these platforms, I see advertisements for platforms. We have 10 billion indicators. We have 10 billion oscillators. We have all these chart tools. We have the fastest news in the world and this and that and blah, blah, blah. And it's all irrelevant. Their goal is to get you to trade. That is their objective. That's how they all make money, whether it's a broker, a Forex dealer, you name it, a chart vendor. They want you to trade because that is how they make money somehow. And the more you trade, the better for them, not for you. So when I see some of these platforms, especially, I'm going to pick on one, Binance, right? Whenever I see something like that, the first thing that crosses my mind is slot machine, because it's all full of all this stimulating stuff. And you're like, oh, look, I can see the order book. Oh, I can see this. Oh, I can see that. Oh, look at this. Oh, a news feed. Oh, look at that. Oh, yeah, right. Yeah. It's all nothing. It's all meaningless. All you need to make decisions, right? Informed decisions that are within the scope of reason for the market is basically just a regular chart like you see in front of you. Okay, a regular chart where you can evaluate the chart formations, the candlesticks, and you can compare current price action to previous price action. Candlesticks offer the most up-to-date information we can get. If there's a large sell order sitting up in here, we can't see the order, but a candle will react to it, right? Just like if you look over here, right, when we had this sell-off, there was buying activity all over here. The candle reacted to it. There's a tail there. Right? So that's valuable information. You can do something with that, or at least it helps to give you some perspective, even if you can't take a risk specifically. Okay, so that's my rant on volume histograms. All right, wow, that was long, right? Okay, next. So thanks again for the Ethereum question. All right, Elijah, good to see you. Oleg, okay, from the Ukraine, welcome. Thanks for stopping by again. I remember you. Peter, Slovakia, okay. Can you apply dollar cost averaging on physical gold? For example, 1 ounce every Monday, will it work? By the way, gold makes, okay, good question on physical gold. Yes, a dollar cost averaging is definitely a viable strategy for physical gold. There's a couple of reasons for that. You know, buying like every Monday, or you want to buy once a month, or because again, when it comes to dollar cost averaging, the chart really doesn't matter at all. Okay, really what matters is your size, how much leverage you're using, and where you are relative to your target allocation. Meaning, if you have $10,000 to invest, how much of that have you invested so far? Because at some point, once you reach that full allocation, you don't want to keep putting something in, especially if it keeps going against you, right? Because that can happen. Now, something like gold, gold is not a garbage penny stock. It's not a garbage altcoin. Gold is gold. And gold is an anti-inflationary, you know, we know the story with gold. So to answer your question, yes, it's a good choice for dollar cost averaging. What's especially good with physical gold is you're not using leverage. So if you have $5,000, for example, and you want to basically convert that to physical pieces of gold, sure. You can pick, you know, you want to do one Monday a month, you want to do every Monday, it's not going to matter. You're just going to be averaging in, and no matter what gold does, you're just going to accumulate until, you know, you've reached your objective. The mistake not to make, like I said, is don't keep buying. If gold goes, you know, to 1,400, which, you know, it's hard to believe would do something like that right now, you know, and you're fully allocated, you don't want to keep putting more and more money in, because you don't want to, you know, you want to keep your risk under control. You know, unless you get some really unusual situation, like gold moves 200 points lower in one day, and, you know, I mean, that's very unusual. You have a little money set aside, you want to throw it in some gold, okay, fine. But you don't want to make the mistake that most people make with this, is they throw in some large amount. Oh, I got $50,000 worth of gold, and then they use leverage on top of it, right? That's definitely the wrong way to do it. So yeah, I would agree with that. And if here's the thing with gold, if the dollar, you have to keep a close eye on the dollar. If the dollar continues this trend, gold is going to be pressured, okay? Same with the other things that trade against the dollar. Now, look, some people have been bringing up things like oil. Look at oil. This oil should be going lower in the face of a strong dollar. But obviously, you know, we know oil is manipulated, all that political stuff, blah, blah, blah. This is a strong chart, all right? So pullbacks on oil. I'm mentioning that because, again, the dollar comparison. Someone mentioned copper futures, okay? I think that's HG1. Right? Is that right? Let me see. Yeah, copper futures, HG1, and something. Look at this, right? That's unusual with a stronger dollar and blah blah blah. But this again, political. This has to do with infrastructure, blah blah blah. Because copper is a big thing used in construction and this and that. Anyway, my point is, be careful of those type of pressures. If the dollar continues, even something like this, wow, I should be buying copper. Okay, but the thing is, if the dollar continues higher, this thing was consolidating, so obviously this thing is reacting to some kind of news or whatever. This thing before that was consolidating, right? In the face of a dollar that's rising. If the dollar continues to rise, this thing is probably going to get pressured again, right? So don't chase these things, is my point. Although copper, like gold, on the bigger picture, there's nothing bearish about this chart. See that? What a nice range breakout. Nothing bearish. So if you just want to play it for the chart, you know, you just wait for another pullback. Just keep in mind that dollar situation. If the dollar breaks lower, okay, dollar breaks this bullish trend, then copper is poised to have a nice big move. Okay, but the dollar is going to have to start breaking lower. And obviously copper and oil, they're outperforming. Those would be good choices in a dollar bearish environment. All right, looking for pullbacks and stuff like that. So thanks for asking. Schwartz from Romania. I'm very big in Romania. Thanks, Schwartz. Schwartz Bond for stopping by. Schwartz is my official international man of mystery. He's always somewhere in the world, somewhere besides Romania. So it's nice to see you. Thank you again for stopping by. Hey, Guy, good to see you. Okay, Mario from Estonia. Okay, cool, welcome. Savi, and Savi's from Brooklyn. Hey, from Brooklyn. They don't talk like that. I know they don't talk like that anymore, but they used to talk like that. Guys, do not forget. Oh, thanks, Savi. Appreciate that. Okay, Ifat from Iran, welcome. Mr. Plow, can you please have a look at Link? Sure, Link USDT. Let's take a look. So, Chainlink. Now, look at this. It's interesting, right? Let's look at the bigger picture first. Because this one, you know, was all big and bad not too long ago. Big and bad meaning it was all full of hype, and now it's been consolidating. Okay, fine. It's a higher low consolidation, right? This is a higher low consolidation. All right, that could be considered a sign of strength. You have this bullish structure back here, right? So that would be the structure that's in play. Now, with all that being said, the more recent move is another higher low. Okay, this is definitely a sign of strength. Can't argue with that. Now, has it broken out yet? No, it has not. This would be the breakout over here. So you have a couple of choices with something like this. If you're not long, there was actually a bullish pin bar the other day. That would have been a long signal. But if you're not long from that, because hey, sometimes you don't catch these, your risk is going to be defined from that level, right? Your risk would be defined from here, which is what price? Here, let's see. What price is the bottom of that pin bar? That's $23.53. So you can round that to like basically $23. And this thing right now is at $27. So that's not horrible risk. I mean, you're looking at $4 or whatever, right? Whatever, $3, $4. It's not horrible. Now, if it breaks out, though, that's assuming you buy it right now. If it breaks out, you're looking at $27.49. Yeah, basically 27, almost 28. So let's assume $4 worth of risk. The next question you have to ask is it within reason for this thing to make at least $4 over the next week or 2 or 3? This thing is not moving this fast, right? What's the high here? 36? So yeah, it's within reason. Right? If you're buying it around 28 and it works its way back to the high, you can justify your reward risk, right? If it can get back to that area. You do have the structure that's favorable. Now, it hasn't broken out yet, and you're still facing this congestion area. So it needs to break out, right? If you want to take it earlier and say, well, I'm going to play it and hope it breaks out, you can do that. But in those situations, the reason why I won't call something like this is because if it hesitates and gives you like a bearish pin bar or some kind of failed high, that requires adjustment. And you know, you have to be nimble. You have to either take a small loss quickly, you know, take a small profit if you have it. You need to do something. Adjust your stop. You know, just sitting there watching it, going all the way back to where you bought it is not a good idea when it gives you a clear signal like that. So that's why, you know, you have to stay on top of it. You have to really monitor it, see where it is every hour, every couple of hours, whatever, maybe every half day, you're checking. And you want to see that thing close strong. Now, of course, I would imagine Bitcoin and Ethereum should be doing a similar thing. And the problem with this chart is Bitcoin is in a risky location. So is Chainlink going to really break through this resistance while Bitcoin is in a risky location? If it has its own individual catalyst, possibly, but if it's dependent on Bitcoin, which most of these things are, and Bitcoin pulls back, then this thing is likely to fake out. So even though the chart can tell us one story, you have to look at what you can't see. You have to consider what you can't see. All right, so basically the probability of the location and its dependency, right? This is not, it doesn't trade on its own typically. It follows Bitcoin. Most of these do. So you have to keep that in mind. And that would also give you another reason, even more reason, to really keep on top of the trade if you get involved in something like that. So I hope that helps. I mean, the general structure is there. Just the more important thing is not the money. Okay, everyone, of course, how much money can I make? How much money can I make? It's not really that. It's how much money can you lose if you're wrong. And you need to take the loss if you're wrong. Because when these things go the wrong way, I mean, especially these are speculative altcoins. I mean, they're no better than penny stocks. When they go the wrong way, you can really lose a significant amount of money, especially if you're using leverage. So you have to respect that stop. All right, I'm talking from the swing trade perspective here. All right, hey, Kim, thanks for stopping by. Okay, Cardano, ADA-USDT. Let's see what's going on in Cardano. A very popular hype coin. So, consolidation, right? We have consolidation. We can argue it's a high or low consolidation. The structure here this isn't a bad structure, right? Bullish. It's pulled back. It's consolidating. But the thing is, the problem here is the relative strength. Bitcoin on highs, Bitcoin fooling around a resistance, and this thing can't even get out of its own way. That's not good, okay? It should not be doing this with Bitcoin performing so well. This thing should be at least pushing the middle of the range or something. It should be here, right? At least. It's not doing that. So the question is, if Bitcoin pulls back, which it's in a location where that's very likely, what is this thing going to do? And not only that, it's showing you a bearish pin bar right now, little bearish pin bar there. So definitely don't like it as a long right now. What you want to do maybe for something like this is wait to see how it behaves when it tests a support. That support is going to be around $2. What is that? About $1.90. You could round that between like $1.90 and $2. That area right there, yeah, I'll draw a little box there. This area, that's probably the more attractive area for something like this. And if it could give you a reversal there, I would imagine Bitcoin would be at a support also, and Bitcoin trying to reverse. Okay, and again, the relationship is not going to be perfect, but that's what you're looking for. That's the location where probability is at least more favorable, because it's more, there's more of a chance that you'll get buying activity in that area. Here, not only is it mixed, right, because you're sort of in the middle of this range, but you're dealing with that relative strength or relative weakness situation, which when I see that, again, I don't like that at all, right? It doesn't always work out like perfectly, like I said, but you know, it shouldn't be behaving that way. Now look, like for an example, when you look at Bitcoin and you look at Ethereum, the charts look similar. In fact, Ethereum looks a little stronger than Bitcoin. That's the way your altcoin should look, right? Like that, after Bitcoin has made such a move, not like this. So thanks for asking about Cardano. Hey, Douglas, I've heard that an approved Bitcoin ETF is set to be announced. Okay, how do you think that announcement or lack of will? Okay, good question, Douglas, about this. Someone mentioned that to me too, something about ETF. If it's scheduled and everyone knows about it, then most likely it's priced in, right? So it probably won't have the obvious effect that, you know, your typical retail trader would think, like, oh, the ETF's coming out. That's got to be good for Bitcoin. No, because everyone that was going to buy is probably in now, especially the smart money, because they probably knew about that way before everyone else. So I would think that it's priced in and most likely have a negative effect, not a positive effect, or maybe price doesn't really react much to it at all. But I would not expect this thing to be pushing 60K just because some ETF comes out. You know, and then they'll be saying, well, but you know, when people buy the ETF, the fund has to go and buy Bitcoin and blah, 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 blah. I wouldn't go by that. Okay, again, anything is possible, but usually when there's some kind of scheduled news like that and everyone knows about it and it's like the obvious thing, usually the opposite is a better chance. And a good example of that is something like the futures. You know, a couple of years ago when they introduced the Bitcoin futures on the CME or the CBO or whatever in Chicago, and what, you know what they were saying at that time? Well, when the futures come out, it's going to open the doors. It's going to open the gates for all the institutions, and Bitcoin is going to go to 150,000 overnight because they all have to buy it. And guess what? The futures came out and Bitcoin went to 3K eventually. Okay, no 150,000. So yeah, so just something to keep in mind. All right, let me see what else we got here. Michelle, hey Michelle, good to see you from Italy. Italy. Buongiorno. That's all I can say really. I know some bad words, but I'm not going to say them here. Oh, thank you, thank you. Just call me a gentleman. Thank you. Mario, greetings from Estonia. Can you have a look at Solana? Sure, AVAX. All right, so you have a bunch of them there. I'll do one, and then I'll get to the other questions, and then I'll come back to your question. Or or you could just put the question again in a separate, put the symbol in a separate question. Okay, so Solana. Now I have an interesting story about Solana, so I'm glad you bring it up. So first of all, let's take a look at the technical situation. I mean, look, it's a good looking chart, right? I'm not going to argue with that. Clearly bullish structure, right? More recent price action, though, is consolidation. Okay, fine, right? So that's a higher low consolidation, no problem. Still, you could still argue that there's some strength. At the moment, you're in the middle of the range, right? Now, recent price action, right, looks like it was trying to come off of that middle, and you can argue that there's a higher low and this and that. But the thing is, the trend, the more short-term trend is not exactly in a trend. So that's why the higher low is not going to carry as much weight. So here's the thing. Since midpoints like this are typically very random, I would prefer to see a test of the low before doing anything if you're not in it. If you're in it, hopefully you've taken something off the table. Now, if Bitcoin pulls back, again, you have to go back to Bitcoin. Now, this thing obviously was doing its own thing for a little while, but these things, just because they start out doing their own thing, doesn't mean they continue to do their own thing. At some point, they go back to following Bitcoin. That relationship is very hard to gauge, that correlation, but it's always changing. So I would anticipate that this thing will probably go back in line with Bitcoin, and since Bitcoin is in a high-risk area, I would expect this thing to pull back if Bitcoin pulls back off of its resistance, right? So if Bitcoin can test 50K, perhaps you get this buying opportunity here. Now, other than that, this is just a 50-50 area. So if you buy it here, I mean, you can measure your risk off of this little mini high or low at 137, but your chances of getting stopped out for a swing trade are going to be very high. I just don't think it's worth it. And especially, like, it's going to have to break out of this range. And while it can happen if there's a specific catalyst, I just think you're getting involved in a situation that it offers there's no advantage there, okay? Like 50-50 is just completely, you might as well flip a coin. Now, let me tell you my little story about Solana. I saw a video about a guy, he was pushing Solana, and he was saying that he's all, he invested all his money in Solana, and all these videos I noticed, all these fake gurus, right? Maybe they came across some lottery ticket along the way, so now they're an altcoin expert, and he's sitting there. You know what they do? I noticed they all have the same kind of pattern. They go into the fundamentals, right? They say, well, and the fundamental research that they do is they just basically Google whatever. They find some basic things. Well, the coin circulation is this, and the inflation rate is going to go from 10% to 1%. All stuff that you could find probably on their website if you just look. So I guess the value of the video is if you don't want to go searching through the website, this guy has done the work for you, and you can get some topical fundamentals. But then he goes on and he's painting this picture of the future, and well, since it's its own blockchain, it's a smart contract, and only smart investors invest in smart contracts, and I'm a smart investor because smart investors don't invest in dumb contracts, or who does that? So this thing is going to be good. I'm putting all my money, and they're conveying this idea of hope, and it's all nonsense. That's the problem that I had with the video, and someone that doesn't know any better, they'll be like, oh, that sounds like a good story. I'm going to buy some of this too, right? And now he put you into something that's extremely risky. It's something that, again, you're pressing the button, so it's not his fault. But the thing is, if you didn't believe his compelling story, or if you didn't watch his dumb story, then you may have known better not to do that, or you wouldn't have put that money in there, right? These are highly speculative, high-risk coins, and this one's expensive. Right? This is $150. This thing can go to $70. It's possible. Anything is possible. You have to treat these things like penny stocks, right? They're all this great talk with their white paper and blah, 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 blah. But we have Ethereum, right? So who needs this thing? I don't know all the details technically, but who cares? Because fundamentals don't really shape the price in the short, especially the short term. Perhaps the long term, but it's the irrational forces of greed and fear that shape the price. So even if something is good or superior to Ethereum or Bitcoin, right? Maybe the technology of this thing is superior, but until it proves itself somehow, it doesn't matter. So just keep that in mind. Don't get lured by the logic of a good story. And I see this over and over with these things, and it sucks in everyone. And that's why these guys get 50,000 views on this video that really doesn't offer any any value. He wasn't getting into any technicals. He wasn't talking about the chart. He wasn't talking about, he was just talking about all this fundamental nonsense that, you know, you could have Googled yourself. Anyway, all right, enough of that rant. But it's just, you know, it's interesting to see how easy it is to mislead people, right? And basically build yourself up as some kind of authority when you're really not. And someone with experience can see right through you. I see. That's why I watch these guys. I want to see how long it takes me to see through their nonsense. It usually takes me less than a minute. All right, let's see what else we got here. Okay, enough of that rant. What else we got? So that was Solana. Okay, Adam. All right, so I see you have a bunch of other Mario. So, but you have put Adam in a separate question. Let's take a look at Adam. So I know Adam had an interesting move recently. Let's take a look here. Adam on Coinbase. So look, it's a similar situation, right? General structure is bullish, so can't argue with that. Now, you have a broad higher low. You have this corrective structure here. It's a consolidation, and it's a higher low. So wherever you have a higher low, it's likely to lead to a higher high at some point. Also, look, it coincides with this old resistance. So that all makes sense. That's all good. Okay, now, as far as longs go, it gave a long signal the other day. If you're watching this thing, right? I mean, actually, no, it's not really a long signal. No, I just can't see right now. But it came off of this support. And it's now giving you this red pin bar, this bearish pin bar type of situation. So not what I want to see when Bitcoin is on a high and in a highly probable reversal, bearish reversal area. This is showing relative weakness, just like some of those other coins we looked at, right? As suspected. I shouldn't be seeing a lower high here. So if you're in it, you know, hopefully if you're in from a low price, hopefully you took something off the table. As far as new longs, I wouldn't do it now. I would wait. At this point, it makes sense to wait for another test of the support, which is what? Basically $30. This thing right now is at $33, right? $33.84. It's not too far away, a couple of dollars. But $30 support would be the place to be looking for a bullish reversal. Now, in that scenario, for this thing to get to $30 or maybe even lower, if it breaks slightly lower, that would also be an attractive area. Maybe you get a failed low, right? A failed low is where it makes the lower low, it gets everyone shaken out because they all put their stop in the same place, and then you get a bullish pin bar right here, right? Something like that. That needs to coincide, or it would be nice if it coincides with a similar situation in Bitcoin, meaning Bitcoin pulls back to like 53 or 52 or something, and gives you a similar thing, maybe even 50K, something like that. That's what you want to see. That would be the attractive opportunity. Again, these things take time to develop, and there's no guarantee we get that scenario. Maybe this thing pulls back a tiny bit, gives you like an inside bar, a bullish inside bar, which turns into a little mini higher low, and then breaks out, right? But either way, if you want to go for the breakout, a breakout formation is likely because this is a consolidation and the broader trend is bullish. So if it breaks out, it's a valid idea. Just make sure your risk is defined. Your risk is going to have to be defined by that $30 low, which means you're going to probably have to take more risk, you know, and you'll have to adjust your size. The other thing is you want to make sure that it's worthwhile. So let me just give you an example. If you're buying, let's say it breaks out, okay, you get this red candle, next candle's green, breaks out, okay. You could draw a trend line connecting these highs. It breaks out of that bearish trend line, and you can say, okay, I got a breakout trade. All right, fine. Let's say the breakout trade is 36.50, something like that. You need to be able to justify the risk that you're taking, and that risk is going to be about $6, maybe $7 at that point. And you need this thing to go that way for you. 45 basically is the high. So you need to get somewhere near there to justify that kind of risk, all right, just to kind of give you an idea. And you need to stay on top of it in case it turns on you, and you need to make adjustments. All right, so anyway, thanks for asking about Adam. Hey, Sean, good to see you from Puget Sound. Izzy, hey, good to see you. Pound. Izzy, were you the guy that asked me about the pound the other day? Because I remember clearly saying to you, oh, it's a short. I remember saying it. I'm going to make fun of myself. It's a short. Right, that's what I was saying over here. I said that looks like a good short, and it gave a sell signal. I was talking about this earlier in the stream, and that idea completely failed. Okay, and would have stopped out because I said, what, about 100, 150, 125 pips worth of risk. Basically, the top of that pin bar took it out. Now, interestingly enough, you're getting this reversal pin bar now again, a bearish pin bar, okay? And that pin bar is appearing in an attractive area for shorts. This is a lower high, right? But here's the thing about this. So now, if the low of this pin bar is taken out, which is 36.53, so basically 36.50. If that's taken out over the next candle, that's a sell signal, right? And it's a sell signal coming off of a noted resistance. The thing is, I would consider that trade aggressive now. You know why? Because there is a higher low behind you. And that structure is not very favorable for shorts. So if you want to go for the aggressive short, you know, you have the location, you have the potential setup, and there's plenty of potential as far as, you know, where to cover that thing. You can easily risk 100 pips to make 200 pips, right? Something like that. There's definitely potential there. Now, so you have that. But the thing is, what is the probability that that trade will work out that way? Well, you're going up against the dollar, right? And we talked about the dollar before. The dollar gave the failed high, and now it's trying to turn. If the dollar can turn back higher, then you'll have some, you know, a better chance of this thing working out. If the dollar continues to be bearish, then this is just going to suck in a bunch of shorts and break higher. And this structure favors more of the bullish scenario at the moment. So it doesn't mean that the bullish scenario will work out. So you just have to understand your risk and what can go wrong. You know, your risk, your reward, and what you should not see. So in this situation like this, it would be an aggressive short, and I wouldn't take that. If you were like on a smaller time frame and you can really monitor it, more like an intraday type of trade, it may make sense, but this can, you know, this could be a pain. Anyway, that's the pound dollar. Thank you for asking about that. And sometimes you get these conflicted situations. And again, it's going to depend on you and your risk tolerance, whether you want to give that a try or not. Hey, Ying from Barcelona, mucho gusto. Thanks for stopping by. Elizabeth deletes volume tools. Yeah, well, you know, again, less is more in this game. You know, when we all start out in this game, the first thing we do is we need to learn, right? We want to learn. So we go researching, Google, YouTube, you know, your broker has all kinds of educational information for you, all kinds of stuff, blog posts, this and that, whatever. And we start to try to use our logic to piece things together. But over time, you realize, oh, well, this trade worked this time, but that trade, I tried again and it doesn't work, and then it works and it doesn't work. I must be missing something. There must be some one thing that I'm missing. And then you go some more, and then some fake guru tells you, yes, I have the magic formula. You're missing this. And again, it's all, there's no advantage to 99% of the stuff that's put in front of us. So anyway, I don't want to go on. I could talk about that all day. Douglas, going along with dollar cost gold, can one do the same for gold? Yes, Douglas. Good question. Gold mining stocks. Let's take a look at NEM, Newmont Mining. So all of these, look, they're all going berserk, right? They all look like altcoins right now, going vertical after getting beat up. Yeah, these are great for dollar cost averaging. Gold mining stocks, again, they're not garbage companies. They're gold mining stocks, right? They're gold mines. And, you know, they all have different situations. But the thing is, some of them pay dividends, which is a good thing. And they're going to be following gold. So in an inflationary environment, these things should benefit because gold should go higher, right? So if you want a dollar cost, especially when these things are getting beat up, I mean, look at the opportunity. We were talking about wheat and precious metals earlier in the year when it was like fooling around over here doing this kind of stuff, right? And that was a great opportunity to be buying into it as it was going lower and lower and lower, right? Because as you can see, these things eventually worked out. They pushed a lot higher, but then they go lower again, right? You see that? It's like this big consolidation. So when you dollar cost average on these, something to keep in mind, if you managed to build a position, some sort of position in this situation, don't forget to take profits when it's going your way, right? You definitely want to do that, because otherwise you run into this type of stuff and it defeats the whole purpose, right? The whole point of averaging is you average in and then you average out of some, and then you average back in, and you're basically just, it's like managing inventory. You know, you work at a supermarket and you got the tomatoes, and you know, you're buying them because they're cheap, and then people come buy the tomatoes off of you, and you know, all right, that's not a good analogy, but you understand what I'm saying, right? So don't forget to take profits in those situations when you have a nice opportunity. And usually when those situations are apparent, or like when you hear it like on the mainstream news, gold miners, now is the time to buy. That's the time to take some money off the table, right? When your friends come to you and say, hey, should I buy gold now? Where were you at 1650? Why are you buying it now at 1850, right? For example, that's very common with something like gold. If gold works its way to 2000 from here, which, you know, is always possible, all the gold people are going to, gold is going to go to 5,000. Buy next week, buy gold, buy as much gold as you can. There's no gold in Fort Knox. The government doesn't know where it is. There's no gold anywhere. You can't buy gold anywhere, right? They've been saying that about silver for years. So that's the time to take your profits on some of your position. You don't have to unload everything, but that's when you unload your inventory on those people when they buying gold, because you know it's on the mainstream news. Anyway, thanks for asking. Ying, Apple got double bottom. Yes, Ying. I was talking about Apple earlier. Apple actually, it's not a double bottom, it's a higher low. And that coincides very nicely with the NASDAQ. I mean, they're very highly correlated. You have a bullish pin bar from yesterday. This is a nice buy signal. I mean, the signal was actually the break of the high of the pin bar, which where this thing gap. Let me see. Actually, no, I don't think Apple gapped. 141.39 was the high, and the low here. Actually, I think there is a little gap there. 141.51 is the low. So yeah, there's a little gap in there. But so you wouldn't have gotten that exact buy price. But the point is, the structure is now changed. This market is closed, and this is a reversal. So if it breaks out tomorrow, theoretically, that's what it should do. It should make the higher high after the higher low. Now, it doesn't mean you go nuts buying these things. The more conservative thing to do after something like this is wait for a little mini continuation pattern, like an inside bar, okay? You get like maybe an inside bar over the next couple of days, like it tries to go a little higher, can't really do it, you get an inside bar. That would be a nice continuation pattern. An inside bar is just basically a triangle on a smaller time frame. So that's, but the structure, I like the structural change. That's definitely bullish. And, you know, unless some other catalyst comes along and reverses this whole thing, this could be the beginning, like I was saying earlier, this new structure could be the beginning of the holiday rally. So, you know, before it's obvious to the rest of the world. Thanks for asking about Apple. Hey, go forth, good to see you. All right, thanks for stopping by. Hey, Jimmy, best authentic, sincere takes on the market. Thanks, I appreciate that. Mario, okay, let's see, FTM, let's take a look. All right, so I think, Mario, you may have asked about this one before. There's a double top there. The general structure is bullish, and your support is going to be over here. So you have this little mini support area where it's fooling around right now, right? You have this little area right here, but it's too near the double top, and you have a bearish pin bar today. So I would wait for more of a pullback on something like this and see if you can get some sort of reversal. This is just too high risk at these levels, like Bitcoin, right? So I'd wait for better prices, see if it can give that to you. Otherwise, you know, you want to take the higher risk. Think about all the people that bought into that bullish pin bar there, and now they're like, why isn't it going higher? So anyway, all right, thanks for asking about that. Let me see what else we got here. Douglas, I really appreciate your advice. I do want to let you know that I heard the same thing about Bitcoin in price once BTC CME ETF was available for purchase a few years ago. Oh, that's interesting, Douglas. Yeah. So again, that's usually the case. If it's known, that means the smart money knew about it light years before it got to the retail sector. And it's news that's not known, right? Surprises that really get a reaction out of the market, because now the market has to price this in. It wasn't priced in before. That's that. And so how do you know about surprise news? Well, if you're a hedge fund or you're whatever, and you have your friend who works over in the U.S. government, and you need some inside information, you just pay someone something or make a charitable donation, and now you have the news before everyone else. Isn't that inside information? Yes, it is, and it's illegal in the stock market, but it's not illegal in the Bitcoin world. It's perfectly legal. So anyway, that's a true advantage. But the announcement that it was approval and would eventually be available to purchase caused it to gain price. Well, the announcement that it was approved, right, because the approval is a different thing, right? The approval is where it comes to it's like a binary thing. Is it going to be yes or is it going to be no, right? If it's yes, well, that's not priced in yet because it could be no. So an approve that you see a lot of that with pharma, biotech stocks. They get some kind of thing approved and the stock goes berserk, right? Everyone knew that it was scheduled to be approved on this day and this whatever, but it's not approved yet. So you could play that approval game, but the thing is, the approval game, it's like a binary thing. So I wouldn't trade on that information, right? What if it's approved? Well, if you're buying Bitcoin off near a low and something gets approved, okay. But if it's at a high and it gets approved, you're still buying into a high. So that's why I don't pay any attention to that stuff. I only look at levels, and I make judgments based on that. Always looking at the risk based on the levels and the structure. I don't pay much attention to news for that reason, because news can only really just get in the way. People say, well, you're nuts, you're not informed. I don't need to be informed. The price tells me what's actually going on, and the price gives me more information because the price tells me what the risk is, and that's really all I'm interested in, the risk. So thanks for mentioning. Hey, Peter, I'm going to spend $100,000 on gold. Yeah, okay. Well, as long as you break that $100,000 up into like $1,000 increments, you should be okay, and don't use leverage. But anyway, yeah, cool. So I got everyone's questions. How am I doing with time? All right, not too bad. So a couple more minutes. Do I have any other questions before I wrap this thing up? I appreciate everyone's questions, and if you can like the video, that's cool too. That's always somewhat helpful. Although the YouTube algorithm doesn't like me very much. I understand why. It's okay. I don't take it personally. I'm just not doing the required things to make the algorithm like me. But don't worry. I'm aware. I'm doing my homework. So anyway, do I have any other questions? And thanks for the great questions, everyone. Peter, are you prepared for some new book like your old one, like the pros using price action, any financial market? Peter, so good question. No, I don't have a new book, although someone offered to help me upgrade my current one, which was nice. So I'm looking into that. But I'm working on something that that people may find interesting, but I don't have anything to really say right now about it. So to answer your specific question, no, I don't have a new ebook coming out. But anyway, that ebook that I do have, it's a summary basically of the techniques that I use to do one thing really, and that is to get context, right? Because let me tell you this, when it comes to strategy and context, everyone wants the strategy. That's why on YouTube, when you look at all these videos, right, this magical strategy is going to promise you 80%, blah, 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 right? You know the videos I'm talking about. Well, all those strategies are random. They only offer a 50% probability. They're not going to tell you that. The producers probably don't even know that themselves. What gives the strategy any value at all is the context within you, the context that you judge it within. So for a quick example, if you're using like a moving average crossover strategy, and the moving average crossover, on a 4-hour chart or something like that, it crosses over bullish. But that crossover happens to be near a major resistance, and you're buying it because the crossover says buy it. You're buying into a resistance. If you knew the context that you were buying into a major resistance because you were using other techniques to identify that resistance, then you wouldn't take that moving average crossover. But your friends who following the system, because you just have to follow the system, are all going to get stopped out because it's going to turn there most likely the wrong way. And here you are buying it, right? So that's why context is really, if you want to call it like the missing thing that everyone's missing, that's really what it is. And context is not like it's not like one thing. It's not, people want like one, give me the one magical thing that's going to solve my problems. Now, context is it's a routine. It's like a series of you looking at this, and this, and this, and then you're weighing that information to give you some kind of context. And now with that context, you can judge a strategy. That's what none of these fake gurus are all stuck on the strategy, and that's what everyone wants. Strategy. Give me a magical strategy. But the strategy is random. If anyone has a strategy that truly has an advantage, they're not going to share it with you, especially for free. They're not going to share it. They're going to use it. They're going to use the advantage for themselves. Because in this game, you cannot share a specific advantage, because if you do, then the advantage will go away. Because eventually more and more people start using it, right? And all you're doing is hurting yourself by giving it away. That's why if you talk to like a professional fund manager and you say, hey, can you tell me your strategy? They'll look at you like, what are you, nuts? I can't give you my strategy or strategies. They also know that strategies come in and out of favor. So you're always adjusting to stuff anyway. That's why an algo guy, some guy that writes some sort of retail algo, that's why they sell them to you, because they know that they're random anyway, or at least they should know that. Because anyone that has an algo, a robot, that can adjust to the market, well, they'll keep it for themselves. And by the way, algos need to be constantly adjusted. They're going to become obsolete once the environment changes in the market, and the market environment is always changing. So anyway, so if you don't know how to trade, if you don't understand the concepts of market microstructure and how orders are processed and all that stuff, if you don't know any of that, it doesn't matter that you're a great programmer. It doesn't matter that you're writing an algo that's based on blah, 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 some retail nonsense, because it's going to be random. Anyway, all right, let me see what else we got here. What books do you recommend to get a good foundation of swing trading? All right, I'm going to answer that, and then I'm going to wrap this up, because I appreciate the questions. All right, for swing trading, there are two books that I would recommend. One of them is the Elliott Wave book. It's an old book by Bob Prechter. It's like a $20 book, and maybe you might be familiar with it. It's sort of a hard book to read. There are probably better books out there on Elliott Wave. Elliott Wave is good because it gives you a forecasting framework, and that's why I wrote about Elliott Wave in my ebook. So that understanding Elliott Wave is one thing, because it gives you a broader view. It doesn't give you a specific strategy. It's not going to give you specific trade setups. It's going to give you a broader view that you can judge within. Okay, so that, and then there's another book. It's called, I can't remember the title, Technical Analysis for the Professional Market Technician or something like that. I don't remember the title exactly. It's I think it's like a $30 or $40 book. I used to have the link. I don't have the link right now, but it was a book that was a required read for the CMT exam, and I found that to be one of the better books that I've read, because it covers a lot of topics in what I liked, because they gave you a lot of statistical detail and a lot of realistic practical use for these things. They talk about, the book covers all kinds of things like oscillators, candlesticks, and the whole thing. And it really talks about, their technical value and where they're not valuable, right? That kind of thing, their limitations. So I just can't remember the name of that book. I'll have to get back to you on that. But those are really like the two books that I recommend if you want to improve your technical analysis. Now, swing trade is basically just a time frame. So you can use the concepts of a swing trader on smaller time frames. Just you have to be able to be very nimble, and you have to adjust to new information as it comes into the market. That's the hard part, right? People don't know how to do that. So things change, and they don't even realize something has changed. All they know is, oh, my position's going against me now, right? So they go into hope mode or it goes to the stop, and they don't understand what changed. usually there's a lot of signs. There's a lot of things that you could have pointed out or picked on that said, oh, you know what, this is changing. My risk is changing. I need to adjust. The larger picture, like a daily time frame, which is appropriate for swing trades, changes occur a lot slower. So it's a lot easier in that regard. Changes are usually also clearer. Also, larger time frames, like a daily chart, these candles and the formations that they develop and the levels are more relevant. They carry more weight because I should say they're less random in that sense because there's more volume involved, right? It takes a lot more volume to form a daily candle than a 5-minute candle. So 5-minute candles are extremely unreliable. You can't, they're very random. So that's why you want to use your analytical skills, and it's better to start on larger time frames. And daily is really as high as it. You don't have to go to weekly and monthly. You really don't need to do that. Daily is appropriate, and then you can, work your way from there. So that's what I'll say about that. Okay, anyway. All right, so I got to wrap this up now. Again, if I missed your question, I apologize. I can't continue here. So if you can, check out, if you're not familiar with Greenbridge Investing, you can check out the site, greenbridgeinvesting.com. There's links in the Show More section. We haven't been calling lots of trades recently. The market hasn't been very, like in recent weeks, it has not been offering a lot of high quality opportunities, right? Now I can understand people may get frustrated with that because it's like, when you guys are going to call trades? But we don't call trades for the sake of calling trades. So I just want to put that out there. If you want to wait until the market gets a little more, I don't know, you want maybe wait a couple more weeks until the market really starts to get more offer higher quality opportunities. And why in a couple of weeks? Because we're getting into the holiday season and we're likely to get more of a clear trend and that kind of stuff. Then maybe it's better to wait for something like that. All right, so I'll leave you with that. Again, I want to thank you all for taking the time here to ask questions and to participate. You can find me on here on TradingView. I'm going to try to see if I can get that working again on Monday. And I'm usually trying to stream a couple of days a week. All right, so again, thank you all for your great questions. If you have any other questions, you know where to reach out. You know where to find me. I want to thank you all. Enjoy the rest of your day, wherever you are. The rest of your day. I can't even talk anymore. Enjoy the rest of your day. Enjoy the rest of the evening, wherever you are in the world. And thank you so much for watching.